Hello and welcome to the play of the day by the Trader Guy. This is the New Zealand dollar Canadian dollar for February 7th. You can see that we have rolled over a bit here recently, and more importantly, the 200-day EMA has acted as resistance as we have bounced again. You can see a little bit of a double top there based upon those two candlesticks. It is starting to roll over. Commodity currencies in general got hit over the last couple of days. Although Canada is a commodity currency, it's a North American commodity currency, and there is a difference. I also would point out that here recently we had a gap lower. We filled the gap, and we've continued to drive to the downside. So looking at this, we can start to tear this apart a little bit. And this is the 4-hour chart. You can see that clearly we are starting to pull back from this area of resistance. And at this point, I would expect a return to go down to about 85.20-ish, looking to get into that little area. To get a little bit more value, we can go to the 1-hour chart and look for our setup. Well, the setup would be 85.75, so a move below 0.8575 sets up a potential move to, and I'm going to be a little bit conservative with this, let's say 20, so that's 55 pips or so. And I think at this point you can risk 30 on this one. It's either going to work or it isn't. And there you go. That could be a relatively simple setup. If you want to hang on for a move closer to 85.05 or so, that could be a way to go. One way to protect yourself going into the employment figures during the session, because Canada is releasing employment figures. Once you get to 85.55, you could have your stop loss to break even. Now, this video series is going to be about intraday trading. This isn't necessarily going to be longer term calls, and that's why the ranges are 20, 50, 70, 80 pips that you'll see. But this is how I see the day setting up. And then, of course, you can make an argument here for a bit of a trend line break. So that lines up with this quite well also. Thanks a lot. Don't forget to subscribe.